Right, okay, so let's look at a couple of losses then. So gold, those were mine. Aussie CAD, that was ours as well. Which ones?
I set that one up though. I was gutted about that one.
Yeah, and
Um,
I think, this week we had a lot of political tension, right? If I give you my kind of my 2 pence on what's happened this week, we had a lot of political tension. We had FOMC coming up, which is always a tougher week to trade. We had obviously previous week was very very bearish. That was Monday here, so yeah, June the 9th. Is that right? Yeah, it is. Yeah, so June the 9th. Okay, Tuesday. Lovely little accumulation, manipulation, distribution pattern for last week. Really beautiful. And it's quite bearish. And we've got to remember, if you look at a really high time frame, look, if we go up to say the weekly, we are in the low of this weekly range. If you imagine that's the weekly high and that's the weekly low, so all we're doing at the moment is we're just rebalancing a little bit. We're just coming up to grab some better value. All that's happened this week is the market has pushed quite significantly bullish. I'm just looking at USD CAD, which obviously had a lot of helping hand with the CAD news. But it's very, very similar for Aussie CAD. We've been relatively bearish for a while, quite bearish. We then had what I would class as a perfectly valid setup. It just happened to fail. And, we're rebalancing at the moment. And when the dollar's rebalancing and, grabbing better value, it generally has an impact on the rest of the marketplace. So yeah, I really wouldn't be too upset about that Aussie CAD trade. It's just, it's just one of those things. It's part.
yeah, no, I was done that. It's not so much. I think the point I'm getting at is it's not so much the losses I'm taking. I'm happy with them because everything I set up, I'm happy with. It's more the wins I'm not getting. Like it's what am I missing? Do you know what I mean? Like
Yeah,
why am I not getting into
yeah,
them? Like what is the? I think that's what's starting to frustrate me a little bit because I'm just seeing the challenge can't go down and down and down.
yeah.
But I'm setting all these things up every morning. I see them
Mm,
play out. I'm just not in them. I'm
yeah.
like,
And I mean, why are you missing them? Because end of the day market's looking pretty clean. Why are you missing them? What is it? What is it about the maybe your daily process? I can't see any losses in here either, Matt. Where am I looking for them?
so the last one really was GBP and NZD, which is probably quite a while ago. There's not a huge amount of losses. It's just there's no wins to go with them. So like my challenge account is 2,500 down.
On what size account?
It's 100K.
Oh, bother.
It's got 5% drawdown, so I'm halfway there now.
Yeah, bother, mate.
So
You'll get out of
blowing it.
that. You'll get out of that easily. One or two good trades gets you back out of that. And if you've had a, what day was this? The 12th. Okay. If you've had some tough times, then you're probably set for some good times, right? GBPJPY. Is that the trade I took as well then? Yeah, it was.
Give me a minute, mate. I'll be out in a minute. How's that? No, no. Just leave it. All right, you can do it. Right, you know.
How'd you pick it up?
You just play with it without it on.
All right, lads. How are we doing? We good?
Oh, man.
Good. Steve with his wife beat her out. You haven't been beating your wife, have you?
What's that?
I said Steve with your wife beat her out.
No, not today. That was last week.
Oh, fair enough. Fair enough.
Learn.
So okay, so we took. So it looks like we took a signal,
How do you pick it up?
and then you jumped back in afterwards, did you?
Yeah, this one wasn't a signal. This was me.
How come I've got it marked up then?
But who is it? Tell me who is it?
It's Father Christmas. Ho ho ho!
We're checking your presents out, so you got to be well behaved, all right? Yeah.
Yeah. So the first entry is definitely valid. Have I marked that
And then
up
it's all
because
that
we were
push.
talking about it? Maybe. Hang on, I can tell you quite easily. Yeah, it must have been because I haven't got it in the signals report. Okay, fine. So we must have been having a conversation about it. I don't think there's anything wrong with the trade once again, because that is almost your exact entry, isn't it? No, yours is up here. And it looks, and you went back in. I can't work out what's going on from here. GBPJPY moves nicely. So let's just break this down. Let's set the replay tool on. All right, and let's just break this down. Let's have a look at what was going on this day. Okay, so we've got relatively clear bullish structure, but what I can see is that because we've had quite a significant pullback, we have got probably hourly bearish structure here. Obviously going down to the hourly, we've got that hourly structure. Excuse me. The only first thing that I can see, and we are Thursday, so it's definitely a valid day to take a trade like that. The only thing that I can see is if you look at this structure here, okay, this is basically an FB.
Yeah, it's an FB, isn't it?
What happens then? But it does continue long, but doesn't make any new highs, and then it takes the low. So it's just FB trapped us. That's all it is. And maybe it was just a little bit too high. Maybe it's just a little bit too high to be getting in. But look, Thursday is a day that we take a trade like that. So I'm not looking at this thinking that this is a bad trade or invalid trade. Liquidity sweep, false break, and it does eventually get to your target. It just comes down and grabs some more liquidity in the meantime of doing so. The FBTB could have been maybe a little bit clearer. I hate how TradingView does this. It's so fucking annoying.
Oh, it's pain.
It's so annoying. I don't know why they haven't fixed it. Like, very clearly, wherever you're centered on in the screen, surely it makes sense just to fucking snap to that, right? If I go to the 5 minute, why are you moving to the right? It doesn't make sense.
Yeah,
Yeah, I don't see anything. Sam, do you notice anything particularly wrong with that setup? Sam? You're muted, mate.
I'm on mute. Zoom out to the 30 minute. Not particularly, no, but I mean, go on to the hourly, oh yes. I mean, that hourly there, just if you went up to a 4 hour, is that just not consolidating? It's just messy, innit? I mean, to be honest with you, you are trading with momentum there. Your 3-4 hour candles are clearly pushing up,
Yeah.
but I mean, once you've got the F boss on the 4 hourly there, you don't really get a T boss.
No.
Does that make sense?
Yeah.
So do you know what I mean? So
But
on the hourly, yeah, it's valid, but I mean,
Yeah.
if you're gonna go to the 4 hour, you've only just had an F boss. You've had an
Yeah.
F boss with momentum, but then the little pullback where you pulled the trade, where you took your first trade there, didn't create any buy. Now I know that's too late, but then that would have been your T boss to get in at a later date in the week.
It's very high up on that.
It's very,
Yeah.
very high up, yeah. And I think, I think it's a good one. It's very similar to, my gold trades this week, really. We had, and I'll show you in a minute, you've got very clear bearish momentum on, and this is what I always say about the hourly time frames. I know you guys sometimes be like, looking at the 4 hour, looking at the 2 hour, they're not mutually exclusive. Okay, you've got to look at them all as one. And so what I'm seeing on this is that you have, Sam's right in that you are trading in line with momentum, but it's only one leg of momentum. And what that indicates to me is that actually, theoretically, we are still in bearish hourly momentum, right? Because you've only had an FBOS, and therefore you do have a trap down here. And the trap does exactly what traps do. Look, it's perfect, right? Take the top of that last candle, drag it across, trap rejection, trap blown. Okay, so there's very clearly an institutional ulterior move here, which was, Alexa, stop. Which was to trap people into the wrong way, wrong side of the market. And, it's very, very similar to what happened on gold this week. And I'll just jump over that in a minute. But that's the only thing I could say is worth considering, is that the trade's correct in the sense that if everything was aligned bullish, I think that trade would have had every chance of playing out. I think the only thing in hindsight is that you haven't had the shift back bullish on the hourly. And so technically, if you're using your cheat sheet, whilst you can use, obviously, a first break, if you're in line with the other momentums, I think, like Sam said, it is quite messy. You know, if you go back, you know, even, well, a month's worth of price action, there's not really any clear direction, is there?
Yeah,
A little bit up,
it's
a
not
little
doing
bit
much, is
down.
it?
So maybe we just need a little bit more confirmation, potentially. Very, very similar, like I said, to what happened on gold this week. So if I go down to the hourly on the gold, okay, I'm looking at the hourly on gold, you know, it's exactly the same scenario, really. You've just got bearish, bearish. So all you've got on the hourly is bearish momentum. Now, I did virtually the same as you in that I saw, you know, some 15-minute shifts. I have to remember ourselves, you know, that's why the cheat sheet's there. If I had my cheat sheet handy when I was looking at these trades would have been invalid because my hourly momentum is still currently bearish when I'm taking the trade. Yes, we've got this, you know, external hourly range, okay, which is valid, but the internal structure, you know, I think we need to talk about this more because it's hitting us quite a lot lately. I've noticed is this conflict between internal and external structure. Really, we need both. You know, if you've got such a big range, this is a 4-hour range, I believe. If you've got such a big range that you've, you know, on a lower time frame but still hourly time frame, you've been able to shift in the opposite direction. Logic says we should really be waiting for that hourly momentum to come back in, right? That's the smart thing to do. So if I had followed that rule with my trading this week, I wouldn't have taken any of these longs. In fact, you know, if I, let me just take screenshots of this just so I've got it. If I clear this off, okay, I've actually got some pretty nice sell setups. 15-minute external, nice sell down there. 15-minute external, nice sell down there. You see what I mean? So this is where momentum is, you know, becomes our best friend, right? And I think, you know, we need to, especially if you've had, you know, a couple of few weeks or, you know, a couple of bad, not bad trades, but some, what am I trying to say? Your results haven't been where you want them to be, then maybe let's just go real back to those basics and just get everything aligned. Look for those stars aligned types of trades, you know, and I'll hold my hands up. This week I had a shit week, and I'm, you know, looking over some of my trades, and I look at my gold trades that, you know, I was really stupid with gold. I was so convinced we were going long because of all the Middle East conflict and stuff. I just kept adding in positions. I'd get a little bit of a push. I wouldn't even hit my first profit target. I'd add in another position. I had 3 positions at one point on gold, and they all lost, you know, and I ended up losing like 1.5% on that. So we all make these mistakes, and sometimes we don't even realize we're making the mistakes. Sometimes, you know, we think everything's in order, and actually when we just take a step back and really overly analyze, you know, the trades that we should be taking, you know, these are the ones that, you know, maybe we should be just trying to avoid as best as we can. But look, every loss is a lesson, right? It's all part of it. You know, we can't be too upset. You know, you've learned from it. It's meant that we've been able to have this conversation, right? We've been able to talk this through, you know, realign your theory points, realign your trading strategy, and just make sure that, you know, going forward, you know, we have the best possible confluences before we take those trades. And if we don't have them, we just hold fire, right? And it might have meant this week that, I don't know. The thing is, I'm looking at this now, I'm thinking, let's say I hadn't been sitting here trying to long gold, would I have been potentially looking at other options? Maybe. You know, I was so focused on gold, I wasn't really looking at anything else because, you know, that was where I was loaded in on. So it's one of those, mate. It happens from time to time. We all make mistakes, and you know, if it teaches you to just take a step back and review these trades, or, you know, run it past me or Sam, you know, tag us in it, or message us direct if you want a quick answer. You know, one of us will always come back to you pretty quickly, and give you our thoughts on it. All right, but I think it's really important now for us to, you know, especially as the one-to-one team, just to make sure we are aligning everything. And, you know, every now and again you can take a trade like that and it plays out really, really well, which is, you know, what I call one win syndrome, right? You have that one win when the rules haven't been 100% met, and it convinces you that you're trading in the right way, when actually you've slightly bent the rules and you've just been lucky. But that one win syndrome then teaches you that you can continually break those rules. and then you come unstuck, and then you take a step back, like I did this week, and I scratch my head being like, why isn't this worked out? Well, look at the structure. It's very clear why my longs didn't work out, right? Because it was just making bearish market structure, and any kind of bullish push was minimal, like tiny little bullish pushes that weren't really breaking any new structure. It was internal structure at most. So it happens to the best of us, Matt. All right? I really wouldn't worry about it. It's all part of the journey. It's allowed us to have this conversation. You're going to come back next week bigger, better, and stronger, and you'll have a good week next week, I promise you. Okay, the dollar's repositions itself now as well, so I'm hoping we get some nice bearish continuations. One thing I will be doing is I'll be waiting for my hourly timeframes to line up. I think it's really, really important for us to get those cheat sheets out as well. Has everyone got easy access to the cheat sheet?
No, where are they?
You won't have it yet, Steve. You'll be coming to it soon. All right, it'll be in the course content soon.
Okay, no worries.
But yeah. So and that's not because I don't want to explain it to you, but I want you to get through the coursework, because the cheat sheet won't make sense until you have.
Yeah, works for me, mate.
All right.
No worries.
All right. Right. I'm just gonna turn this food off quickly. Sam, you can take over for a minute.
Sound. Does anyone? Well, you know what? While we're
Yeah, Sam, could I
Yeah,
ask a question just about he's just marked up in these M15 sweeps. How would you have taken like the first one on the left hand side? Because to me, I don't know if I could draw it on.
Is this on gold? Yeah.
Yeah, this one. I mean, I know he's just marked it up as if I don't know if he would have taken the trade or not, but I would have seen like probably this level as like the sweep, which it didn't sweep, so it would have kept me out of the trade. But
Yeah.
it's the same as this one as well. Because for me, again, it would have been that level there for a sweep. I don't know if you would have traded it either. I don't know. But
No. Is them levels there are exactly levels what I've we've eliminated from the sort of strategy, I suppose, the refinement. This was so if we zoom into the gold here. So I think it was this range here, wasn't it? What he was.
So hot.
So like this here on the 15-minute, is this the sweep we was talking about then? You wouldn't consider this a new range. Similar. Yeah, you wouldn't consider this a new range anyway, because I mean the candle closed there, that candle closed there, that candle closed there. That's just not convincing. If that makes sense, you need something really convincing, similar to like this.
Yeah.
Similar to like that, where you've got a really big momentum shift down. You've actually had an external sweep there, so you really, if you'd have took that trade, there you go. There's your bearish trade, isn't it? So if you start trading from like these internal ranges, and this is the reason why we made the refinement, is you try and take a trade from there, you'd lose it because it'd just shoot straight up. I know we didn't get the lower term confirmation, but for argument's sake, let's just say we did. You'd lose the trade there. You'd then be thinking, well, there's another high that I could mark up, or even set an alert on. So really, you've had two alerts go off there, which you've had to come to your phone for no reason. Obviously, you're not going to know at this point in time. But if we just go to the externals, you'll always find the external will take the liquidity quite easily noticeable as well. Look at the wick there. Look how small that wick there was. The body closed above it with the tiniest of wicks, but then you get this massive wick here. It's quite a noticeable wick to take the external liquidity. So again there, for instance, again there, an internal level. Now we used to trade off these, or try and trade off them anyway. Now this one you may have been lucky with, but if you stuck with sort of checks, 3 candles above, you wouldn't have been able to take that anyway, as like the liquidity sweep. So for me, like Chris was saying, these ranges need to be really obvious. Like your 15-minute range, that's clearly a really obvious 15-minute range. There, you've got loads of momentum down, but you still sat in this consolidation. It's still not actually going anywhere. Do you know what I mean? You've got these massive rejections here, but really, that price is just stuck in there. So if you'd have took this, you're only taking an internal range there anyway. So the likelihood of this, you'd have had to get your stop up here to be safe. For instance, like down here, look how close these have come back to. So personally, I would try and ignore these internal levels and just go for your external. Even that you could even argue that as an internal to this. internal to this, but obviously that's the one that's the range that sticks out with the momentum all the way down there. You've got this massive liquidity move up, quite a sharp move up, just taking the liquidity above there, and then obviously then we go, for instance, like this. This is one that back in the day I would have definitely been interested in if I was looking to sell this. You'd be looking at that, and then you see that wick there. I'd have gone down the time frames to find any old random high there that's liquidated, and then take the trade. So that's why we've made the requirements that we have to look for the external sweep now. It's just obvious there's one level to go off. Do you know what I mean? You don't have alert after alert after alert going off, potentially taking a couple of losses before you actually get the external to take the actual trade down. So I mean, if we're looking at that there, in hindsight now, it's just a massive consolidation. But at the time, like Chris was saying, with everything going on in the world, everything was looking like bullish gold, and it's just sort of windled its way down, hasn't it?
I think it adds back into that, what we just been talking about waiting for the hourly timeframes to realign, right? Because had we waited for a nice hourly push, then ultimately, do you know what, I was looking, I thought I nearly messaged you about Aussie CAD. Did you take it?
What? No, but while you was talking then, what's actually happened to Aussie and New Zealand in the last half an hour?
I don't think it's anything other than potentially other markets coming in.
Like they've all had like a massive push within the last half an hour.
I think Australia's just woken up though, isn't it?
Oh yeah, I suppose it's 7 o'clock in the morning there, isn't it?
Yeah.
But yeah, no, this is what I was marking up while he was talking there.
Yeah.
But then I thought, what's going on here?
Yeah, I saw that because I was looking at that external level all day, and obviously I was going to potentially take a long from there, but we didn't get the push until now. But I think that's got legs in it, to be fair. Just coming back to the point we were talking about that range, I think it goes back to getting those hourly lines up as well, and understanding the average of the hourly time frames, right? Because if you just looked at the 4-hour time frame, you'd be looking at the gold market and you'd be saying, well, this is a long market right now, so all we need is a 15-minute shift. And we're forgetting the fact that the hourly has shifted bearish in order to come down to this level. If we wait for an hourly bullish structure, so at least an hourly first break, so now we have a 4-hour bullish range plus an hourly first break, what happens to the 15-minute?
It should have shifted, shouldn't it? It's just something we were talking about earlier, wasn't it?
It will shift significantly. So if the hourly gives us a first break, then we've got a significant move now, right? On the 15-minute. You will definitely have, unless it's just a straight shot up because of news, you will definitely have a first break and a true break on the 15-minute time frame. So now you've got a 4-hour bullish range, you've got an hourly first break in line with that 4-hour range, and you'll have 15-minute shifting bullish. Well, the beauty of that as well is then we have to be patient, right? Because if your hourly, and I'll just draw on your chart quickly, Sam, move it to the right a little bit.
If you go, Sam, go to Euro AUD because there's a perfect example on that.
Don't even have it. Euro AUD.
Yeah, Euro AUD. This is one of the ones that I sent to Chris this afternoon because the hourly is like bearish, the H4 is bullish, and then it's had a 15-minute bullish shift, but like this.
Yeah, I was looking at selling that this morning.
Like this one.
Yeah.
Yeah, so I was like conflicted because like the H4, or I think it was the H4 on the left hand side is relatively bullish, or it could be a daily range, I suppose actually. But then obviously the H1 was bearish. Yeah. So I was very conflicted, and I was thinking, should I take a 15? If I get a 15-minute sweep, am I taking that bearish? Because I mean, I know it's not pro 4-hour, but it was just an opportunity. But
see, I think that's a slightly different example. Let me show you why. Sam, can I just share my screen quickly?
Yeah, go for it.
I think that's a slightly different example. Let me show you why. Okay, so what we're talking about here, right, is we're talking about the fact that we've got a 4-hour bullish range and we want to be waiting for a good hourly first break, okay? Now, what will happen within that first break on the hourly is you'll get significant structure, most probably on the 15-minute, right? Okay, that's now aligning everything up. So you've got hourly bullish on the 4-hour. You've had hourly bearish to come back to take liquidity. We have an hourly first break, which gives us at least a warning signal we might go long. And the 15-minute now is significantly bullish. the beauty of something like this is that because it creates that structure, we have to wait, don't we? We have to wait for price to pull back and give us a potential setup. Slight difference with the Euro AUD that I saw there is this, okay? If we look at the 4 hour, you are right that we've had a bullish leg, but I actually think that the 4 hour you've got very clear structure here. See that and that? So we've actually had a pullback structure, okay? We can see bearish structure now.
Here's your chicken.
I can see bearish structure now on the 4 hour, and that is the same as the hourly. So you've actually got the hourly timeframes aligned in this one already. So what I'd be looking at for that is that this is just a false break, because technically we are bearish on the 4 hour, and this range that you're referring to as a 4 hour range, it's only clearly a single range on the daily. So that's where this is a little bit different, because in this one you actually have things aligned, whereas with the gold situation we had a bullish 4 hour, a bearish hour, so we're waiting for a bullish hour to signal us into a trade. In this one you've got a daily bullish, you've got all of the hourly timeframes bearish, so I'd actually say this is a pretty valid potential sell setup, okay? And what I'd be waiting for here, because we've had a false break, okay, you've got no true break at the moment, you've got a false break here, I'd argue that this is probably a trap, and let's keep an eye on this for tomorrow. I'll just mark it in green so we can keep an eye on it tomorrow, okay? And I'd argue that what we're waiting for now is we're waiting for that 15-minute shift. So the 15-minute first break, okay, if we can get the 15-minute true break, then we are set to go short, and we've got now a target. Did you have it the other way, Jace?
Yeah, I've got it the other way, only because, see, this is where my little range theory gets a bit, troubles me a little bit.
Okay, so best thing to do with your ranges is grab your Pathfinder tool, okay, and draw really quickly, without thinking about it too much, all the significant highs and lows that you can see. That will give you your ranges.
That's the thing, because I can see it, like with the H4, I can see it's bearish in terms of that. But that big push in that first range at the top, sorry, the last range at the top, or the first range right at the pinnacle of those three candles, I don't know why that to me it looks like it, and I think to myself, is that a bullish range? And I think, and obviously it's been broken through.
It's a bullish range because if you go down to the 2 hour and the 1 hour, it's still visible and clear.
Yeah, I'm booking it now.
Okay. Yeah.
Yeah. Okay, and you see you've got a candle closure above there.
I'm doing it from my house to your house. Oh my God.
So it makes it a significant move.
67 lose.
Okay.
All right.
I remember that from a range for because to me, I had that now. 4 hours bullish,
Yeah,
1
I know
hour
what
was
you mean.
bearish, 1 hour's gone false, and it's had 15-minute shifts.
I can completely
bullish.
understand why you see it that way. And I think from a daily perspective, you've definitely got a daily bullish range and you've got daily bullish momentum. But if you look at how much time's elapsed, you know, we're not just looking at... If we were here on that candle, I'd probably agree with you that this has every chance of going bullish. By the time you had 3 days worth of bearish price action, and, you know, these aren't small candles, right? These are significant bearish moves. That indicates to me that we've got a pretty significant bearish move, as you can see on the hourly. All right. So yeah, keep an eye on that. I would say that's probably a short setup if you can get the confirmation. Would you agree, Sam? Or
yeah, similar to Jay. That last range there, it's a bit of a difficult one, isn't it? I know exactly what you're saying. But that 1 4 hour candle would definitely put me off. So maybe I'd be looking at it the same way as Jay, except the only thing I'd be changing in the way that Jay said, it's just go to the 4 hour. If we go to the 4 hour there, we've had the F-boss and C-boss on a 4 hour. So although I wouldn't have marked that as my range, which you've marked there, I had the bigger one marked up, which we said to daily, I'd still say the 4 hours bearish. So even though I still wouldn't have had that range there, it doesn't make any difference. Do you know what I mean?
And
I just wouldn't have been looking for an external sweep there, you know, at the bottom of that range to go long, if that makes sense.
down here.
No, sorry, yeah. So while you've got this range marked, I wouldn't be looking for an external sweep of this, for instance, to go like that.
How come?
Just because, like I was saying there, because of that 1 4 hour candle there, and then you've got this candle here and this tiny one here, I wouldn't have marked that as a 4 hour range.
And I suppose really that's the beauty of our trade strategy, right? Is that
Yeah.
you've got to line so many things up, and you wouldn't. Let's say you would have probably been at least looking at that level for a reaction. Long story short is we didn't get the reaction. So the trade's null and void anyway, and that's the beauty of it, is that, and this is where when we look over some of our losses, like I look at my gold loss, and Matt, we look at that loss that we just spoke about. Sometimes we have to just take a step back and be like, have we properly analysed this, and have I put myself in the strongest position possible for this trade to win? Has the trade got a good potential? For example, a buy from here just below a weekly level, let's say that that is the weekly high there, but let's say it was from previous. A buy from here doesn't give us a huge room for maneuver, whereas a buy from down here would do, right? So sometimes we have to, maybe just wait for those really, really perfect setups every now and again. And, if you've had a tough time, what I'll be doing next week is A, I'll be bouncing ideas off Sam, and Sam will be doing the same for me. And B, we'll just be making sure everything is fucking perfect. Because if it's not, it doesn't deserve to be traded at the moment. If you're in any bit of drawdown, best advice I can give you, halve your risk until you're back into profit. Yes, it's going to take twice as long, but it's so easy to get that fuck it mentality. And what you should be doing is if you're into drawdown, if you're below what would be classed as a zero balance, so on a 100k account, 100k, halve your risk until you're back up. Go through the routine of just, it's almost like paying the piper, right? Okay? You want to not punish yourself, but you want to almost earn back the privilege of trading at full risk whilst still protecting your account and putting yourself in the best position possible to take a little bit more time to get yourself caught back up. Because there's no sense in, if you're struggling or you've had a couple of bad weeks or you've had a couple of bad trades and you've gone into negative drawdown, there's no sense in trading at the same risk when your mind is probably not in the right place. And this is a cycle that we all go through, okay? I come off the back, if you look at my signals report, okay, I've come off the back of, so if I take out my losses from this week, look, okay, a 61% win rate with 29 R. So let's say for me, that's about 15% average, okay? So I've come off the back of 61% and I've added 5 losses in a row. It's my biggest losing streak in a row ever. Sorry, not ever, but big losing streak in a long, long time. And, my previous month, I had a 70% win rate, So it happens to the best of us. And sometimes we do get lost in the wins. We do get a little bit caught up in the confidence of thinking, I've cracked it, I've nailed it, I've got nothing to worry about now, everything's in the right place, everything's moving well, I'm trading really, really well. And then what you do is you start cutting corners. You start cutting corners, blurring those lines, not following those processes that you maybe should have been following. And what I wanted to do tonight, that we'll do next week now, is just go over, really, really clearly go over our daily routine. All right, and I'm going to do that with us next week, next Thursday. We're going to go over the daily routine in finite detail and just make sure we're all working in the exact same way and the exact right way every single day. You all know what the daily routine is, so and I can see that most of you are doing it almost every single day. But next week we're going to go over it properly. Okay. Next week should be better. The market should be clearer. The market should be better next week. And make sure you've got your cheat sheets handy. I want everyone to be using those cheat sheets and lining up with it. And maybe you need to add that to a checklist point on your trading journals. Maybe you need to add in cheat sheet checked or cheat sheet validate or whatever however you want to word it. Maybe it's something you need to add in. It's certainly something I'll be having handy, making sure I'm aligning everything next week. Because you're never smarter than the market. You're never better than the market, and the market will always remind you from time to time that it is in control and you have no control. All right, and all we can do is just follow our strategy, follow our rules that we know keep us safe. And most of the time when we have tougher weeks or we have losing days, most of the time you can find fault in those trades that you've made. It's very, very rare that I come off the back of a losing week and I can't find faults in the trades that I made. I might have a losing trade and be absolutely fine with it. If I have a losing week, then something's gone wrong. Because I know my rules maintain me a 70% win rate. And my rules this week have given me a 20% win rate. So I've broken something this week. and I need to fix that. And the sooner you can acknowledge those things and remind yourself of what you need to be doing, the better, because you'll just get back on track. And what happens is you eventually just get to the point where these losing streaks become smaller and smaller. You get back on track sooner and sooner, and everything starts falling back into place again. All right, before you know it, you'll be having loads of wins in a row, end up with a perfect week. And that's what I'm aiming for next week. I want a 100% win rate week next week. You watch. All right. Any questions? Anything to add, Sam?
No, mate. No, mate. You said at the start of the week it was going to be tough. It's proved it has been.
Yeah. You know what happened? That GBPCHF trade gave us that massive win on Tuesday, and I was like, oh, what am I worried about? Let's go. Let's go. Trading, eh? Why do we do it?
What do you think about CAD JPY?
What now?
Sell for tomorrow? No, well, not now, no, because it's just consolidating, but sell for tomorrow.
Do you know what? I'm going to say something now. I don't think I like trading the JPY pairs anymore.
Do you not?
No, whenever I look at them, they just don't make me feel good. You're looking at longs, yeah?
No, so I'm actually looking for. Oh, done me there.
Right, bullish daily. Hang on. Bullish 4 hour. I don't love shorts, I'll be honest.
Oh, if you've got we got Tuesday high, Wednesday minute distribution down from last week's, but some from Friday to Monday's push up. Your hourly has turned bearish internally. Got the last hourly range here.
Yeah.
Swept it there. Massively down. That's what I'm thinking.
Maybe. I'm looking at my daily bullish.
Do that.
Bullish daily range. Bullish hourly 4 hour. You're right, the hourly 1 hour has shifted bearish. But then we have that first break, the one that we were just talking about on the previous charts, out of our dead zone. Do you know what I think I would be wanting, and you might not get this? So I want a break of that, or a break of that.
Do you wait for extra confirmation down or up?
I think my worry would be is that if you get a sell, you might be limited by that low.
Yeah, fair.
Because potentially, if this is a shift back bullish, because you've got daily bullish and you've got 4 hour bullish, if this is a shift back bullish and it does come down, that low is potentially where it's going to be taken. It's right in the middle of that zone as well, which makes me nervous. It's that dead zone trade, isn't it?
Yeah.
I think that if we're conflicted on it slightly, I think definitely confirmation's needed.
Yeah, and you just reiterated why I think ACAD failed on Tuesday. Was it Tuesday? No, Wednesday. Sorry,
Wednesday,
yes, yeah. That was right in the middle of that dead zone.
Yeah.
Of the larger 4 hour range.
Yeah. Let's have a look at ACAD then. So ACAD is bearish on the daily, but we've had 3 bullish days. So we've got a bit of a momentum for this week. We've got clear hourly momentum on all time frames. This is our last range. Do you know what? I really like that long.
Yeah, I've got that mapped up, but I mean, it needs to come down quite a long way to give you damn issue.
I think it needs a shift as well. It needs this.
Yeah.
First break, true break. But potentially tomorrow we get something like that. Can buy out and maybe there.
Save the week.
Let's see. Let's see. I said I wouldn't trade. I said I wouldn't trade anymore this week, and then I fucking took a gold, didn't I? This afternoon, which would still be. Luckily, I made $20 on that on a 100k account, so I'm classing that as a win. It's like 0.002. Anyway, right, fellas, lovely to see you all. Any questions? As always, give me a shout. All right, get working on those daily routines. You know what they are. Make sure you've got your cheat sheets handy so we can go through them as we need them. And let's have a good end to the week. Don't rush or force anything tomorrow. Next week, we should have a better week. And then Thursday, we'll have a catch up and we'll spend a bit of time just reaffirming those daily routines, just making sure everything's in the right place. All right? Cool.
Yeah,
Lovely to
mate.
see you all. Take it easy.
See you later.
Cheers, mate.
Cheers, mate. Thank you.
Bye bye.
Bye-bye.